Hi everyone. So I wanted to do our weekly Nasdaq review. And before I start doing the review, I wanted to refer to a comment I got in Hebrew. I will translate it. Okay. So the comment was about me doing and making a study of a breaker in an inner trade course, in an intraday trading course with a weekly chart. And the person he didn't like it. So let's read what he wrote, right? So he wrote like this. Look at this. You are displaying a weekly daily chart, which the reversal, the breaker blocks are more clear for a swing, in my opinion. But this is under a short inter-day trading course in Hebrew. And then he says, there is no relation between the weekly performances into the intraday technique, which you explained. You need to show an intraday chart in order, if it is an intraday chart. Well, your name is Nathan Herman, and Nathan, I don't know if you see this or not, but let me tell you something. I don't think like the way you just wrote. I think a little bit different. And in my opinion, and all I'm doing when I'm looking at the weekly chart, at the monthly chart, it is related even to a 30-second chart. And you might ask yourself, what? There's no way there is a connection between a 30-second chart and a monthly chart. And I'm telling you, if you don't understand the monthly chart, you would never be able to catch the long trades. Because when I'm trading with a 30 seconds chart, I'm not trading it for 30 seconds. I'm going to trade it for a long run. And let me show you a few things. So this is a WhatsApp message to a hedge fund in Israel that I've done an analysis for. And I want to read you some of the messages, not to brag or something like that, only to understand why I use the weekly chart and why I think that's important, because everyone that listens to this video might not think that weekly chart is not involved in intraday trading, because that's so wrong. Unless you want to trade for very, very small time periods and you want to get very small profit. But if you want to get the big move of the day, the real big move of the day, you cannot rely on an intraday analysis. You must understand the macro. And this is what I wrote the guy from the hedge fund, from the investment house in Israel. And I've sent him the analysis, and I've shown him exactly what's going to happen in the market. And surprise, surprise, it did happen. And I sent it 10 days ago, on the 7th of March, right? That's what I've sent him. And I told him that's what I expect. And he was very impressed. And I told him he was impressed from my the things that I captured, the long trades that I captured, because they only do tiny trades. That's their style, all right? They're trading with small time frames. So I sent him that, and I told him, bro, the reason I get very long trades is because I understand correctly the macro. And I told him, look at my lives. It is always related on deep understanding of the macro. And a real trader must be an analyst, because he was telling me I need an analyst, someone to analyze the market. And I was telling him for him to show his investors. And I was telling him, look, a trader must be an analyst. You cannot separate both of them. And he was saying that his reply was, there's no words, really pure professionality. And then he continued to say that he used to do that and now he stopped, so he needs someone else to do it. Anyway, that's one thing. And I want to back the thing that I've just said with evidence. So let's move to my Trade of 8 page, which you can see that big trade that I've captured, right? So when I'm looking at this, you can see that this trade 1, 2030. This is one account, okay? I have six. This is one of my six accounts. I didn't record it, so I didn't upload it. I didn't upload it to the channel. I'm just showing this to you now. This is $2,310, and I've captured it. It was open for 2 hours, but look, it started here exactly. It started at 12 o'clock. It ended. I've closed at 2:47, and the profit was very big, as you can see. Very, very nice trade. And how could I have done this? How could I have to take this trade? And by the way, if it wasn't Friday, I could have ride the move much lower. But it was Friday, and I usually don't keep open trades. I don't trade. I just might keep an open trade because it's Friday and I don't work after half time of the day. After the noon of day, I'm not working. I'm not doing things like that. I'm just keeping my preparation for Shabbos, for Shabbat. So how is it done? It's done through analysis of the macro. My friend Nathan, I know maybe you had good intentions. Maybe you were trying just to, I don't know, get your own opinion, but it looks like you're trying to tease me, and it's fine, no problem. That's okay with me. But I'm just backing up what I'm doing and what's my idea in trading is that, and I'm looking at trading as a whole thing. I don't look at trading as something that is only for one specific chart, because in my eyes, and again, this is my point of view, a lot of people try to trade, they have specific rules for trading charts and things like that. To me, prices is not related at all to any chart. The weekly, the daily, the monthly, the hourly, the 4-hour, the half hour, the 15 minutes, 30 seconds, 5 seconds. Some of you saw me trade on 5 seconds. For me, they are all the same. They're just showing what price is doing. Actually, the only real chart is a tick chart. That's the only real chart. The rest of the chart are just something to give you more confidence. But charts, the price is naked. Is not. We are looking at something that moves without relation to the chart. So, in other words, when I'm doing the analysis of weekly and daily charts, I'm not doing it because I think it's something unrelated. I'm doing it because I'm sure it is related, because that's the way I trade. I'm trying to ride the weekly, the monthly, the daily move. So, Nathan Herman, this is my opinion. If you don't like it, that is fine. Each of us can have a different opinion, different way, and with different style. I'm just showing what I am doing, and everything is good. Thank you for your comment. Now let's move to the real analysis, right? Here we are. So, on the weekly chart, when we look at this, we absolutely had a bearish move, and let's see why. First of all, price did close below this low, which means to me that the price is absolutely going to drive lower. It's going to drive lower. I see Monday maybe giving a little bit higher prices, but eventually it must reach this area. It must reach this area. So, in my opinion, next week anyway must reach those areas. Those are a must, those areas, right? This is just an absolute rational area for price to reach. And actually even lower. We have a breaker here that I'm going to mark. This one, a weekly breaker. All right. That price would likely go down here, but I won't be surprised. if price just will capture this breaker, because currently everyone thinks about selling and everyone is trying to sell hard. But as you know, price and market is manipulative. And if there is by any chance that on Wednesday, when the decision of the interest rate would be something that is bullish to the market, we will see a big climb up using this breaker. Very, very possible. So this is the weekly outlook. I'm positive that price might reach here or here. And if we will take Fibonacci, which is a very important tool, and we stretch it, we can see that price already reached discount when it went down. It actually, you know what? It didn't reach discount. It had respected discount price of 50% earlier, but if we're talking about this top, it hadn't reached discount, this lower area. What does it mean? It means that price must reach to those areas around here, or more reasonably here. So one of those might act as a breaker block to push even higher. We have higher targets. It is very rational that the price would reach higher, and there are 13 days to the close of the month. Trading days even less. So we can potentially see a fall down around those areas, maybe touch in the 50%, maybe touch in the 0.618 Fibonacci area for and this breaker for a higher push. This is the weekly chart. Let's see what we had on the daily. On the daily chart, things look much more bearish, right? We had bearish breaks here, we had bearish movement here, and then this is again the weekly breaker, which has a nice areas for a bounce up. Very nice areas to bounce up. So you can see that price actually respected this breaker earlier on the daily chart. Look, it touched it and went up, but it closed lower than this low. What does it mean? We are going low. We are going lower. So I expect price to go maybe a bit higher on Monday, and then the rest of the week touch around this area, and then climb up with the help of news, probably, all is possible, or even going down here, also very reasonably possible for a lower breaker and making a touch of a 50% or 0.6 of the Fibonacci. So this is a daily and weekly overview review. Keep this in mind, because when you want to trade the big moves, you need to know this. You cannot rely just on, I don't know, some sort of patterns that would be unvalid, and you would get lost. You will break your account, blow your account because you didn't listen to the macro. Remember, you must listen to the macro. And by the way, we have lots of liquidity down here. Lots of liquidity down here, which is probably going to be broken, right? So there's some sort of line here that it is now broke. It was broke. So I suppose that price might reach around this area and then break up again. So this is my overview. I hope when you try to trade big trades, you think about the macro. Remember that. That is the most important thing. So trade safe, trade well, stick to your money management plan, and have great success. Bye-bye.